So let's understand what diluted EPS is. Okay, so write down a sentence. Diluted EPS will always be equal to or lesser than basic EPS. This sentence you mark 5 stars. How can you put this into your blood? But at any point of time you have to know this sentence, that diluted EPS will always be less than or equal to basic EPS, which means diluted EPS can never be more than basic EPS. Okay, and that's why word diluted means lesser strong, which means it is now lesser. Okay. Second sentence, diluted EPS is required to be calculated. Diluted EPS is required to be calculated if a company has complex capital structure. If a company has complex capital structure, this complex capital structure underline and put it into inverted commas. Okay. So rather than thinking of it as a word complex, think of it as a name. That complex capital structure is some type of a capital structure. It's like a noun. So now a sentence below that, a company is said to have complex capital structure. A sentence below that, a company is said to have a complex capital structure if it has issued one of the following 4 securities. If it has issued one of the following 4 securities. Number 1, convertible preferred stock. Convertible preferred stock. Number 2, convertible bonds. Number 3, ESOPs. ESOPs are employee stock option plans. And number 4, share warrants. Share warrants. At this stage, think of ESOPs and share warrants as the same thing. I'll explain you what it means, but we will do it step by step. Okay, how to deal with this. So give heading now, convertible preferred stock. Convertible preferred stock. Okay. So first example in this series. Let us say a company has profit after tax of 7 million. Number of common shares outstanding as of now is 100,000. Number of convertible preference shares or preferred stock. Convertible preference shares or preferred stock outstanding is again 100,000. Face value of 10 and preference dividend rate of 20%. Tax rate of 30%. We have to calculate basic and diluted EPS for the company. Can you at least calculate basic as of now? So tell me how much is basic. 70,000? No, incorrect. 68? Yes, that's correct. Numerator is profit available for equity shareholders. We have to adjust for preference dividend. Okay, so how do we solve this? I'm writing formula for basic EPS. 7 million in the numerator minus the preference dividend. How do we calculate preference dividend? Preference shares 100,000, face value 10, the multiplication of these would be a million, into 20%, which would give us 200,000. Are you following this? So this is your numerator. What is the denominator? Only the common shares. Weighted average number of common shares outstanding during the year. So I would write down 100,000 here, which would give us a basic EPS of 68. Okay. Now let's understand what is the meaning of dilution. Going forward, someday my convertible preference shares will come to me and say that please convert them to equity shares. If I convert them to equity shares, my denominator of basic EPS will increase. Yes, because we will have more number of shares. Maybe some impact on the numerator, but because of which my EPS is going to reduce in future. Okay, which means even if I maintain my existing level of profitability, because of a complex capital structure, my EPS is going to reduce in future automatically without affecting profitability. So that reduced EPS is called diluted EPS. Okay, and therefore again we have to use a what if scenario. What if these convertible preference shares are converted to equity shares? Then what happens to my denominator? Let me change the color just a minute. So now my denominator will increase by another 100,000. Yes? Agree? That my convertible preference shares would be converted to equity shares or common shares, assuming a ratio of 1:1. Will it have any impact on the numerator? Yes. What? We do not have to pay this preference dividend anymore. And therefore my diluted EPS is 7 million divided by 200,000 is 35. Easy? So write down the example. We'll do one more similar example. That's what we assumed, yes. We assumed that they were converted at the... Not always. If those preference shares were issued during the year, it would have been something else. Okay, but we shouldn't be doing that now. Let's do it basic at this stage. What? What? No. Preference share is a preference share. Equity is equity. Debt is debt. It's just that they are convertible. That's it. They're not mezzanine. Are we good to go ahead? Example 2 in the same series now. Example 2. Let's say profit after tax is... Do you want it difficult? Hmm? Okay. Let's say EPS as of now is 42. EPS as of now, basic EPS is 42. Number of common shares is 100,000. Number of convertible preferred stock is 100,000. Face value 10. Dividend rate 15%. Calculate diluted EPS. Okay, there's a small trick in the question, so please be careful. Basic EPS is 42. Let's solve together. How was this 42 derived? This basic EPS, which is equal to 42, must have been profit available to the equity shareholder, which is nothing but profit after tax minus the preference dividend. Preference dividend is how much? 15 lakhs. So, which means profit after tax must have been 57 lakhs. So 57 lakhs, that is 5.7 million, minus a preference dividend of, mistake, yes. So which makes it as 43 lakh 50,000 minus 1 lakh 50,000 divided by weighted average number of common shares, which is 100,000. Should I repeat this part again? Basic EPS is 42. Number of shares are 1 lakh, which means profit available for equity shareholder 42 lakhs. Up to this we are okay? This multiplied with this, profit available for equity shareholder 42. But preference dividend was 1.5 lakhs. Which means that profit after tax must have been 43.5. Preference dividend 1.5 divided by 1 lakh. That's how we got 42. Correct? Now when we convert this, denominator increases by another 100,000. Numerator we don't have to pay this anymore. So 43.5 divided by 200,000, which would give us 21.75 years. So 21.75 was correct. How many of you got it right? First go. Okay. Should I repeat again? Yes, no? If I give you the other way around here, if I tell you that there is a company which has got profit of 43.5, preference dividend of 1.5, number of shares 1 lakh, what is the basic EPS? 42. So if you have this 42, if you have this 1, if you have this 1.5, can you reverse calculate 43.5? Yes, so that's what we did. Okay. Example 3, now give heading. Convertible bonds. This is again a step higher. You will really enjoy this now. Convertible bonds. Okay, example 3. Profit after tax 4 million or 40 lakhs. Number of common shares 200,000 or 2 lakhs. Number of convertible bonds 100,000. Face value of convertible bonds 10. Interest rate 20%. Tax rate 30%. First, simply calculate basic EPS. Basic EPS as of now. Just the basic EPS. How many of you got 19? How many of you have 20? 20 is the answer. Let's see why. Numerator is profit available to equity shareholder. We have anyways paid interest. How do we get this profit? Sales minus cost is your EBIT, minus interest minus taxes is profit after tax. So to derive this profit after tax, we have anyways paid interest. You should not reduce it again. So simply 40 lakhs in the numerator divided by 2 lakhs in the denominator, which gives you a basic EPS of 20. Is that clear? Now what happens to the denominator? My denominator will increase by 1 lakh. To calculate diluted EPS, my denominator will increase by 1 lakh because these convertible bonds would be converted to equity shares. Agree? Will it have any impact on the numerator? Yes. If I convert my bonds, I do not have to pay interest anymore. Interest of how much? 1 lakh into 10, which is 100 lakhs. Sorry, which is 10 lakhs into 20% was 2 lakhs. So I do not have to pay interest of 2 lakhs anymore. Therefore, profits will increase by 2 lakhs? No. Because if my profits increase by 2 lakhs, I end up paying extra taxes of 60,000. Isn't it? 30%, 60,000. So my net profit will increase by 1,40,000. So 41.4 divided by 3 is your answer, which is 41.4 divided by 3, which is, calculate karo na, how much? 13.8. So this is your diluted EPS. Yes, Shrikant. The bonds are not converted. See, in diluted EPS, we are not converting them as of now. We are assuming what if. So which means it doesn't really matter when they are actually converted. Because at the end of the year, we are assuming what if they were converted, then my diluted EPS. How did we get that? Interest was how much? Interest was how much? 2 lakhs. 20% is 2 lakhs. My profits will increase by 2 lakhs. On that increased 2 lakhs, how much taxes will I pay? 30%. How much? 60. So net saving 1,40,000. Do you want to try one? Easy or difficult? This wouldn't be so difficult. Example 4. Basic earning per share is 7. Actually, it is going to be difficult. Basic earning per share 7. Number of common shares 100,000. Number of common shares 100,000. Number of convertible bonds 1,000. Face value of the convertible bonds 100. Interest rate on convertible bonds is 20%. Tax rate is 30%. Calculate basic EPS and so calculate diluted EPS. Conversion ratio is 1:1. Yes, that's incorrect. 6.09 is incorrect. 6.9? No. 7? Are you saying diluted EPS is 7? How many of you have got 7? 7 is the answer now. And this question doesn't require you to calculate. Now see carefully what's happening here. What is the amount of interest that we are going to save now? 100 into 20% was 20. Into 1000 was 20,000. But 20,000 is interest saving. How much extra tax do I pay? 6,000. So profits will increase by how much? 14,000. So a 14,000 increase in the numerator. Should I repeat again? 1,000 into 100 into 20% is 20,000. Into 70% is 14,000. After tax interest. Denominator will increase by how much? 1,000. If you calculate revised EPS, karo 7.06. Is it greater than the basic EPS of 7? Yes. Which means the security is anti-dilutive. And if the security is anti-dilutive, your basic EPS and diluted EPS is same, which is 7. So give a heading, say anti-dilutive bond. Anti-dilutive convertible bond. Understand the logic why. Anti-dilutive convertible bond. Now understand why. If I am a bondholder currently, how much interest I am getting per bond from the company? 20. Let's say I am paying tax of 30% on that. After tax, how much I am saving for myself? 14. If I convert, EPS is how much? 7. Will I like to convert? No, because I am earning more. And therefore I wouldn't want to convert, and therefore they are anti-dilutive. Okay. So therefore a diluted EPS has to be less than or equal to basic EPS. So in this case your answer is 7, saying that security is anti-dilutive. Are we good? Sorry? It means that a bondholder would never want to convert, he would prefer to get his money back. Conversion will never happen in this kind of a scenario. A shareholder will be happy, his EPS is increasing. A bondholder would not want it. Because he is making 14 per bond as of now. After that he will make only 7 or 7.06. He would never want it. Yes. No, see, whether it's happening or not, we are not concerned. We are today trying to tell our shareholders that because of complex capital structure we have already issued, what is the dilution that's going to happen in EPS. In this case, we know by simple logic a bondholder would never convert, which means that dilution will never happen. Therefore, this is an anti-dilutive security. Yeah, it can happen in preferential as well. So you could have done it orally. See, it's like this. For every share, I'm adding 14 with a ratio of 7. Therefore, it was anyways going to increase the ratio. And therefore, it was anti-dilutive. Okay. So now what question I saw in one of the mock exams. This kind of capital structure data was given. And the question was asked, does this company have a complex capital structure? And the answer is yes. Even though the security is dilutive, a complex capital structure happens if you have one of the 4 securities. The company does have security, and therefore you do not have to worry about it. It is a complex capital structure. Are we okay here? Even if it is anti-dilutive, it is still a complex capital structure. Okay? You don't have to do it. Yes, it is anti-dilutive, absolutely. So, diluted EPS is 7, not 7.06. 7.